Hey, it's Brian Gabriel. Welcome to the Candlestick Cash Radar. We're going to look at our weekly targets for the third week of March here. And it looks like we pretty much called it as far as being a short or nothing, right? You don't want to be long this market right now. It's not easy. Sure, if you could find the right stocks, um, yeah, if you're very, very lucky, that can always happen. But just take a look at the S&P over the last 1 month. We are 7.8% down. So that's a loser's game to be, trading the long side. And there's not any good sectors really. If you look at it, there's one that's green and it's healthcare and it's just flat. That's not even a tenth of a percent up in the last month. And energy's about a break even as well. So pretty atrocious out there. The worst sectors are, consumer discretionary and technology, down 13 and 10%. So we're going to be looking. You're going to see a little. Well, here's a little preview. XLY, consumer discretionary. We're looking to short if we do anything. We got the Fed speaking on Wednesday. We always look at how after Monday's taking place, how the market is shaping up. We're about to look at that. We'll look at our three indices, but I want to probably wait past Wednesday, and then we have our triple witching on Friday. So this week is just not going to be a very good trading week unless you're possibly shorting the XLY, and we've got a couple names we're looking at in there. One of them is something we looked at last week as well. So, and then just what happened today, what happened the first day of the week here on Monday. Well, it was actually an up day. Every sector went up. The SPY was up 64 points. And look what was the weakest. Consumer discretionary. Even on an up day, all it can muster is barely anything, just flat. So there we go. So let's take a look at our charts. We're going to start with the Dow as always. Remember, we talked about this being an important point. Then you had your trend, your bearish trend kicker. See how it's a big green candle followed by a big red candle. That is a bearish trend kicker. And then we move down further. Let me make this bigger here. We just keep selling off. Finally, you get a bull sash, and on Friday, and then today you came back up to the 200 and the T line. So we're in a downtrend in the Dow, and nothing has changed there. We're still in that downtrend. Yeah, you could say the bearish momentum is starting to fade a little bit. That's the best you can say. So you could look down to some possible targets. I mean, that low there at 404 that occurred back in September. Maybe that gives us something, but looking at the Qs for the NASDAQ, yeah, it's pretty. We've a couple bounce days, but I don't know if we're out of the dungeon here with the NASDAQ. It's just a great time to stay flat, as I said. And here is your SPY, your S&P 500, bull sash on all three of those markets on Friday. We did close over the 8 EMA T line, but we're under the 200 with this one. And so let's look at the XLY. There's your consumer discretionary. That's even worse than the overall market. Slightly worse. And here was a continuation signal with the downside to Suki gap, where you have this red day and you gap down, you have a high wave doji. You had a green day, but you couldn't fill the gap. So that is a bearish continuation pattern, and continue it has from 208, got all the way down to 191 something. And so, yeah, it's just in a bearish downtrend here, this XLY. So if you want to short the XLY, that's possibly a good way to do it. See if we can. We did a little inside green candle on Friday, but we're at 197. Let's see if we test that 192 and then possibly break under it as well. So looking to go short, if anything. And a couple of these, I think all three of these are in the XLY. But let's see, we have TJ Maxx. TJ Maxx is in an ugly downtrend and it's building up its bearish momentum, as you can see on the Squeeze Pro. You flushed right through the 50, and even the 200 was no match for it. So yeah, a little green day today, but that's, if you're looking at a short, that's what you want to see. You want to sell the rip. So possibly selling right at the T line, the 8 EMA here, or if we retest the 200, look to possibly short TJ Maxx. You can find your targets. One spot is there around 112, 111. Let's see, is where it is now, but this here is around. Let's see, we've got 115 in the post market right now. So yeah, we're, can sell the rip if we can get up there to 115, 116, 117. Maybe you bring it back down to 112 as your first target. So that's TJ Maxx. CMG. CMG is something we've had on this list. It has been working as a short just fine. So you had your kind of V shape here, flattened out, flushed, and there's your bearish J hook. Remember we talked about that last week? This is a bearish J hook. Does this J shape? It's upside down because it's bearish. If I were to flip it, you can see that it's a J, but it goes the opposite direction, so it's like an upside down J. All right, and just look at your Darvis here. If we could just break under 48, notice how it can't close over that T line. So this is very, very bearish, probably a good short. Your MACD has not crossed over, and yeah, I would look to possibly short that. And then Affirm got bad news. Apparently, they're not. Walmart has been using them at checkout for the buy now and pay later. They're still using. They'll still have, what is it, their logo until the end of the year, but then this other private company that might be IPOing later this year is being used by Walmart. They're being picked up. They're being promoted. So that hurt Affirm today, down 4%. But Affirm was already in this downtrend, and it's right at the 200 right now. So it'll be interesting to see if it can hold. We have a little bit of a falling window right here. And I think, let's see here. So the low on Friday was 48.33. The high today, 48.06. So there's about a 20 cent to really zoom in to see it. But there's a little bit of a window there. So that is a falling window. So if it can't, this could be a resistance, this window here. So we do have an extreme wick, potential extreme wick reversal back to the upside, but just pay attention to that. I would look to possibly go short for the reasons that, look, you're in a downtrend, you got the bad news, you have the falling window. So Affirm might be my favorite short of the week, but all three of those are interesting. Or even just short the XLY, because there are so many XLY names that are looking pretty bad. Let's go into my list here, XLY, my list of lists, and you could see, you could just start going through all of them and I'll just very briefly, Nike is kind of neutral, Booking Holdings is in a downtrend, McDonald's has been the brightest point in the XLY. It's still actually in an uptrend and had a good bounce day today. So McDonald's I would not short, definitely not. TJ Maxx we already discussed. These are the top 10 holdings, by the way, in the top 10 weightings in the XLY consumer discretionary sector. Starbucks, that's starting a downtrend as well. Home Depot, same thing. Lowe's, we talked about CMG, Chipotle. Amazon's another pretty ugly, looking short, and Tesla, of course. So those are your top 10. They all, except for McDonald's, are potential shorts. But I gave you my three that I'm thinking of. Well, four if you include just the XLY. And a great reason to just short the XLY is there's so many of these, including the most heavily weighted like Amazon and Tesla, that are quite bearish. They're in downtrends. So that will do it for the third week of March. I hope you have a great week trading, and thanks for tuning in to Candlestick Cash.